Welcome to the Techno Fundamental Report for November 21st. First of all, I wanted to wish everyone a happy Thanksgiving and enjoy being with your family. Starting out, well, let's just see here what Ray Kroc had to say. He said, the key to success is being in the right place at the right time. Recognizing that you are there and taking action. Bill Gates, I was lucky to be in the right place at the right time, but many others were also in the right place, in the same place. The difference was that I took action. You know, the 15-cent hamburger, 1940, 1982 computer. You can see here that the bull market that started in 1982 was really driven by the personal computer. So anyway, the thing to realize is that the stock market has a million moving parts. You know, if you get hung up on things like wars in the Middle East or who's president or something like that, I think you're missing the point. The main moving parts that you need to pay attention to is corporate earnings and interest rates. Now, everyone is concerned about the national debt. Of course, everyone is. But I thought this was an interesting factoid that I just was really kind of shocked, actually. This is federal outlays interest on the debt as a percent of gross domestic GDP. Now you can see here that right now we're at about less than 2% of GDP in the interest cost on the federal debt. Now, back in the 80s, and the early 90s, it was much worse. I mean, the economy was smaller, the debt was higher. So did we get through it? Yes, we did. Will we get through this? Yes, we will. Now, the financial conditions index looks very positive. You know, we're not seeing anything like this here. Everything looks fairly stable. You know, this is the most advertised recession I've ever seen, and I've never seen a true recession advertised. They usually come out of the night. Now, I thought this was interesting too. This is the total amount of money in money market funds. We're at $6 trillion. Now, we know that the total value of the stock market is about $46 trillion, but this is a very high level of cash sitting out there, so that if we do get going with the bull market, and we do think that there's a strong possibility that we have started a new bull market, there is a ton of cash on the sidelines that can come in and add fuel. The other thing too is that the inflation numbers seem to be improving. You might want to pause your video player on this, but the basic thing that the headline says is that the key U.S. inflation gauge fell last month by the most since 2020. Inflation moderates, cooling faster than expected. Now, what we look at on one of our indicators is the number of new lows on the New York Stock Exchange, and we also keep an eye on the number of new highs. However, right now at this period where we've been in a 2-year, 10-month bear market, and it appears that we're coming out of it, the sellers need to dry up first. So the main indicator that I would be watching would be the number of new lows, because as the sellers dry up, that sets the stage for new highs. We're just not getting the new highs yet, but they are improving. Let's look at the banks for a minute. This is the regional banking. Looks much better. Was looking quite dire, and then we got a major rally as interest rates started to come down a little bit. The advanced decline line for the NASDAQ is improving. That's an uptrend. We are now in an uptrend on the advanced decline line, which means that there's more advancers than decliners, so that's good news. The power index is in a downtrend. This is very positive. It's telling me that interest rates are starting to stabilize. So we saw that the interest rates peaked here, are in a downtrend. The power index, which is a 125-day, 6-month number, is saying that interest rates over the last 6 months are up about 17%. Where they were up as much as almost 50%. So interest rates are improving. Now, the other point is the main trend is still up. Here's the 200-day moving average for the S&P. Here's the 200-day moving average for the NASDAQ. The main trend is up. We are possibly entering a bull market, but the main trend is up. Now, I think it's important to note here about the volatility index. This is the fear index. We're getting really low readings here. So if we felt like this market rally that we're having was a bear market rally, we would be concerned if the VIX was up here. But it's not. It's down here. So the fear index is definitely improving. This is the aggression index. It is hitting a new high. Very positive. This is a positive trend for the growth stocks. Here we have our three economic indicators. You can see here interest rates are really starting to come down here. Price of oil is somewhat stabilizing, but still in a downtrend. And most important, the financial stocks are looking much, much better. This is a fund, this is a growth fund, a very growthy fund called the ARK Innovation Fund. It has broken out and is now in an uptrend. So things are positive. So if you have any questions, please let me know. Thank you very much.